Chemcon Global Financial Services. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohit Nagraj from Chemcon Global Financial Services. Thank you, and over to you, sir.
Thank you, sir. Good afternoon, everyone, and I hope everyone is keeping well. I would like to welcome the management of Chemcon Speciality Chemicals and thank them for this opportunity. We have with us the senior management team represented by Mr. Kamal Agarwal, Chairman and Managing Director, and Mr. Rajesh Gandhi, Whole-Time Director and Chief Financial Officer. I shall now hand over the call to the management for their opening remarks. Over to you, sir.
Thank you, dear. Good noon to everybody. On behalf of Chemcon Speciality Chemicals Limited, I extend a very warm welcome to everyone for joining the call today. I hope you and your loved ones are safe and doing well. On this call, we are joined by the Whole-Time Director and CFO, Mr. Rajesh Gandhi, and the HGA, our Investor Relations Advisors. I hope everyone has got an opportunity to go through the financial results and the investor presentations which have been uploaded on the stock exchange as well as the company's website. We'll give you a quick snapshot of the recent developments and then Mr. Rajesh will walk through the financial performances. Our company has reported a decent performance in Q3 22 despite our facilities being non-operational during the initial period of the quarter. It was non-operational for a period of more than about 25 days. All our key products like HMDS, CMIC, bromide have delivered a noteworthy performance. In total, our production volume stood at 1,333 tons of the third quarter for FY22 with an operating income of 49.5 crores. On product performance, first I would like to update you on HMDS that has contributed 36 crores of the revenue during the quarter. The overall pricing of HMDS has been volatile during the quarter and it varied in the range from 1500 to 700. This has also impacted overall turnover figures. We have successfully commenced the commercial productions of plant number P8, the two plants that were part of the IPO proceeds to be put up at Manjusar in Vadodara. The company has added an additional capacity to produce 2,400 metric tons per year of trimethylchlorosilane, that is TMCS, a basic raw material for production of HMDS. This is a significant achievement for the company as we have completed our backward integration process to produce essential raw material, that is TMCS, which is largely used in the production of HMDS. We are confident to report a healthy business in the coming quarters looking into by utilization of this capacity. Now I would like to highlight you on CMIC that has contributed around 5 crores of revenue during the quarter. The chemical has reported muted business primarily due to the lower demand as the clients were unable to source other key raw materials as well as had a limited business cycle for the product tenofovir. The global supply chain has disrupted the overall business momentum across many pharma MNCs. So overall demand of CMIC chemical is very strong and we have healthy inquiries for the next 2 to 3 quarters. Due to strong demand in the local market, we will be adding our additional capacity of 1,200 metric tons per year at P8 facility by the end of current month, making us the world's largest CMIC producer with a total capacity of 3,000 metric tons per annum. The import of CMIC in the domestic market accounts to about 40% of the India's consumption, indicating that the product has a very bright future. On oil well chemicals, For the quarter, we have registered a revenue of 8 crores in the bromide business. Our oil well completion segment has performed marginally better as overall offshore oil and gas wells are fostering gradual growth in the drilling and completion fluids market. With crude price inching up, we expect demand of this chemical to restore steadily. Apart from these three products, we also have HNDS with a very high purity utilized for the electronic and the health market. We have 4-CPC, 2,5-DHT and are also in our product basket. Both the products 4-CPC and 2,5-DHT are still in the preliminary stage, and we expect them to perform well in the coming time. High purity HMDS primarily serves the semiconductor and the rubber manufacturing silicon and pharmaceutical applications, among other things. There's no commercial pickup of this chemical as overall approval time is taking longer than our expectations. We firmly believe that these chemicals will create value for our customers and in turn will drive the revenue and margins for the company to upward. Currently, the expansion of Plant 9 is in progress and is expected to commercialize in Q1 23. We are happy to announce that we have started the mechanical construction of the plant number 10 at the same location for other pharma intermediate products. We are now persistently focusing on restoring business growth, growing in our product portfolio, and expanding our global footprint to create the sustainable business in long term. I would hand over to Mr. Rajesh for the financial highlights. I request Rajesh to please go ahead further.
Thank you, Mr. Agarwal. Good afternoon, everyone. Q3 and 9 month 22 has been decent quarter for us as our key product witnessed robust demand. Q3 22 performance are as follows. Total revenue stood at 49.5 crores. Domestic market contributed around 77%, whereas international market contributed around 23%. Total production volume for the Q3 stood at 1,333 metric ton. Segment-wise revenue is as follows. HMDS revenue stood at 36 crores. CMIC revenue stood at 5 crores. Oil well completion revenue stood at 8 crores. EBITDA stood at 17.3 crores in Q3 22. Net profit for Q3 22 stood at 13.5 crores. For 9 month performance as follow. Total revenue stood at 168 crores. Domestic market contributed around 67%, whereas international market contributed around 33%. Production volume for 9 months 22 was at 4,182 metric tons. Segment-wise revenue for 9 months as are below. HMDS revenue stood at 85 crores. CMIC revenue stood at 42 crores. Oil well completion revenue stood at 36 crores. EBITDA stood at 54 crores 9 months 22. Net profit for 9 months 22 stood at 41.5 crores. With this, I conclude this presentation and open the floor for further discussion. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. First question is from the line of Kumar Soumya from Ambit Capital. Please go ahead.
Hello, sir. Good afternoon. So just wanted to understand two things. So firstly, on the CMIC side, firstly on this TMCS side, so with this 2400 capacity, what will be the share of the captive consumption? What will be the proportion which will be secured captively, and what proportion will be sourced from outside market?
Soumya, good noon to you. We will be utilizing 100% of the TMCS that will be produced in plant for our captive consumption only. We are one of the largest importers of TMCS otherwise, and this will help us in utilizing these capacities for the domestic production of HMDS. And with the expanded volumes of HMDS, we will be not requiring additional quantities for the imports. So expanded volumes of HMDS will consume the domestic produced TMCS.
Okay, so the total requirements for TMCS will be met through this unit, if I'm right?
For the expanded volumes, yes, not for the total demand. Okay. So this will not help us in growing the top line, but will help us in growing the bottom line.
Okay, margins will be better.
Yeah, margins would be better.
And sir, secondly, on the oil bromides segment, so the last quarter we had seen a significant jump in realization, which has come back to 115 rupees this quarter. So if you could throw some light, why is this volatility quarter on quarter? Because
you see, the volatility depends upon the demand-supply gap as well as with the market pricing of the raw material. Now, with our own manufacture of TMCS, we will be able to partially stabilize that pricing of raw material, and then we will be able to rule the market in a different way. However, as on date, we are banking upon the raw material imports, and the prices varies like anything, and hence the finished product.
And same bromides also? Bromides has also seen realization fall from 400 to 115 in this quarter.
The bromides has not given a fall in the pricing. It has given in their volume as well as the value. So it is not the pricing. The pricing is growing for the bromide also. The price of, if we say it was used to be about 138 to 145 rupees a kg, in today's era it is about 175 rupees a kg. So there is an increase of more than 20% price rise. However, the volumes have dropped. It will be growing in the coming time as the crude oil prices are moving up.
If you see sequentially, sir, last quarter we did about 584 ton of bromide. This quarter we have done around 700 ton. So looking at the revenue, last quarter we did 23 crores. This quarter we have done 8 crores in bromides. The realization seems to have dropped sequentially. Quarter on quarter.
Agreed. It is an international demand-supply gap which we are facing the limitations on that. But current quarter, yes, it is running very good.
And how is the pricing for HMDS in the current quarter?
HMDS current pricing, I can guide you to the tune of say about $10.
Oh.
$10 is the import price as on date, say about 750 rupees, and plus added the taxes. The domestic sales what we are carrying out in today's era is about 850 rupees.
Okay. Thank you, sir. That will be all for now.
Welcome, dear.
Thank you. Next question is from the line of Mukesh Savla from Shah and Savla LLP. Please go ahead.
Thanks for taking my question. Sir, can you update us on the pollution control litigation that is pending before Gujarat board? And also we have made some payment of about 60 lakhs rupees. So what could be the ultimate penalty that we are liable to pay, and how soon we should be able to complete this litigation and come out clean?
Thank you, Mukesh. I was just noting down and splitting your question into three parts.
Okay.
One, what is the status? Yes, I would update you the status as you see the plant was being given a permission to run for a period of 3 months. The normal practice is the plant is always given a period of 3 months, repeated 3 months 3 times. and that makes it to up to a year. And thereafter, it is given a full permission or total revocation has been done after observing for more than 12 months. In our case, whatever details they had asked us to carry out within our plant, we could successfully complete up that within the first 3 months itself. And we, instead of repeating the revocation of 3 months, we have requested them for a full permanent revocation of the injunction.
Good.
So the ball is in their court. They have already made the visits to the plant, and we are awaiting the outcome of that. We hope maximum a week to 10 days. However, it is government, it is not a commitment, please understand. But we are expecting within a week to 10 days, we should get the permanent revocation of this and avoiding the quarterly revocations. In respect to your second part, that is 60 lakh of rupee paid as compensation. It is not 60, I would like to bring it, I would correct it, it is 50 lakh, 50.
Okay. We paid some 10 lakhs also prior to paying 50 lakhs, right?
That 10 lakh is a bank guarantee given to them, it is not paid to them.
Okay, okay.
In the eventuality that we are not performing as per the requirements of the GPCB, they have the right to encash that bank guarantee.
Okay, okay.
10 lakh is a bank guarantee and 50 lakh has been paid as interim amount as per them.
Well, are we expecting any further penalty to be paid or not? And another thing, I think some case was scheduled few days back and which could not be taken up. So when is the next hearing fixed up?
I would complete that 50 lakh that has been paid, that is lying over there with them, and we do not expect any more additions to be done in that. Post revocation, we would be taking up the matter with them to refund us this amount, because according to us, according to the company, we have not carried out any wrong or illegal thing within our premises or outside the premises. So we will be taking up the matter with them once we get the full-time revocation of this.
Good.
In respect to how soon we will be able to do that, I have updated you. It should be taking about a week to 10 days. Right? Anything I have oversighted, please?
No, I just wanted to know, I think some case hearing was fixed up last month or something, and which could not be taken up due to COVID. So I think some fresh date must have been given to us for the hearing of the same case.
It is a matter in the High Court. We will be taking, as the High Courts are working only on online on emergency cases. We have to file up the cases with High Court and take up the matter further.
Okay.
So before within the next week, we will be filing that to the High Court.
First class. And my second question is on, sir, capacity utilization seems to be little poor in HMDC and oil well, whereas I feel CMIC probably we are using good. So just can you update us on the capacity utilization and going forward how they are going to remain in the coming year? And about that high purity HMDS which we have started manufacturing, what is the traction and did we get any breakthrough with semiconductor producer or some rubber companies or something like that? So can you just update us on those facts? Thank you.
There the capacities utilized during the quarter. You can consider, you see, more than 25 days the plant could not be operated because of the restrictions by TPCB. Right. So it is less than 65 days production. Right. And we hope, we understand we have carried out to the best possible. In respect to the high purity HMDS, well, the rubber industries have already started. We have started supplying commercials to them. And semiconductor, it is still to enter.
All right, sir. Thank you so much, and that's all from my side. Wish you all the very best.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Next question is from the line of Satish Kumar, a shareholder. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. My first question is, how is the demand for HMDS now, and how much quantity we are expected to do it in the Q4?
The demand is a hotcake product. We do not have stocks of less than half-day production in our premises. Whatever we are producing, it is sold as a hotcake product. It is dispatched the same day. That is the scenario as far as the product is concerned as HMDS. Quantity demand is good. It is the volumes that we will be able to produce in Q4, we will be able to supply that.
So, we are in a position to produce, I think, around 1,500. Do you think we will be able to run at full capacity?
No, the plant won't be able to run at full capacity, but around 65 to 70%, which is a general trend in the business, we will be able to achieve that.
Okay. Now, the second is CMIC also, you said there are very good orders for next 2 to 3 quarters. So there also, are we in a position to utilize the full capacity during this quarter?
We have the dispatch schedules and the order book for the current quarter. And it is for the full production of the current quarter.
So with both HMDS and CMIC are expected to run at whatever the practical possible full capacity utilization. So we should expect some good revenue during Q4?
We will be doing that. Because the CMIC optimum capacities we are running, and with the addition of the plant for the last 1 month, March, in plant P8, we will be able to add on further volume. We hope we will be able to do better compared to the year-on-year what we had been doing.
Sir, my next question is on this high purity HMDS. For the semiconductor industry, it was taking more time, but we were to supply in both silicon and as well as in the pharma industry. Could we get any breakthrough in that?
I've already updated it is to the pharma industry, particularly the high purity rubber that is used for the body parts, implants. And we have the breakthrough in that. We are already supplying now the commercials.
But is this margins are same as the high purity HMDS?
It is absolutely same. Whether it is used for the electronic or for the rubber, the margins or the sale price realizations are identical. Even the quality is identical. So the product has started moving commercially.
Okay, very good, sir. Nice to know that. So my last question is on the TMCS, which we have put up the capacity for 2,000 metric ton. Is there any plan to increase this capacity?
You see, the raw material limitations are there. It is using hexamethyl disiloxane, HMDO, as its raw material, and there are very high limitations of that. We are evaluating the international market for this raw material. Suppose we are able to click up the international market for raw material, we will be able to utilize that for expanded volumes. At that stage, we will take the call whether to go ahead for the expansion or not. As on date, we do not have any plans as such.
Thank you very much, sir, and wish you all the best.
Welcome, Satish.
Thank you. Next question is from the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So my first question is, 2,400 TMCS manufacturing. How much of, will it suffice for our current HMDS manufacturing?
See, about 1.5 kg of TMCS is required to manufacture 1 kg of HMDS.
Right.
So it will be able to cope up for something like 1,800 tons.
Okay, so almost 1/3.
It is definitely out of the total capacities. Yes.
Oh. And sir, what is then the raw material to manufacture TMCS?
It is hexamethyl disiloxane, HMDO.
HMDO. Oh, so are we manufacturing HMDO in-house?
No.
Okay. So we are procuring HMDO and charging it with HCl then.
We procure HMDO, we convert it to TMCS, and then TMCS is further converted to HMDS.
Right. Okay. And what is the HMDO situation like? Are we able to procure this material, and what are the prices like?
It is procured from the domestic market as a byproduct coming out during the manufacture of CMIC, and the prices of this also varies with the price of final product HMDS. It moves in proportion to that.
So it is a byproduct, sir?
It is a byproduct, or it is an off-stream product that is generated when you use HMDS.
All right. And sir, how are the raw material prices of CMIC behaving? Are we seeing any pressure on what is the supply chain like?
CMIC raw materials are consistent. There is no increase or decrease. They are stable.
Right. Also, sir, in P8 we were supposed to manufacture one other chemical. What is the status on that?
Sorry?
In P8 we were supposed to manufacture one more chemical. What is the status on that?
Yeah, Ayushi, we were discussing on the plant number 8 and 9 for the new product.
Correct. What is the status on that?
Yeah, plant number 8 is for CMIC 1200 tons and 2400 tons of TMCS. TMCS, it has already started producing. CMIC, by end of the current month, it will be starting the production. Plant number 9 will be for Gunai, and it is under implementation. By Q1 23, we will be able to produce that product.
All right. So Gunai is the new product that we will manufacture in P9, and there is no other new product?
No.
Okay. That's it from my side, sir. Thank you. I'll come back in the queue.
Welcome, Ayush.
Thank you. The next question is from the line of Amit Kothari from Ace Securities. Please go ahead.
Good afternoon, sir. Thank you for taking my questions. Sir, I have a couple of questions. So firstly, can you highlight some more details about our 3 new products?
Amit, I'm sorry, I could not get in depth of your question. You mean to understand? Do you want to say it is for in respect to the 2,5-DHT 4-CBC?
Correct, sir. DHT or CBC.
And high purity HMDS.
Correct, sir.
Right. As I already updated, high purity HMDS has been commercially started. It is we have started the business of this. 2,5-DHT, we are still to get the approval. 4-CBC, it is not off-taking in the market much. It is on a very small scale compared to what we had expected.
Okay, sir. So we are approaching new clients for all these 3 products.
Yes, we are approaching, and we are also finding an alternate solutions to this because it is getting a bit delayed. So we are working on alternate solutions, looking for the international market as well.
Okay, sir. And sir, my next question would be, sir, how is our bromine business doing at this moment? And at the current level of crude price, how much it can contribute to us in the next year?
Bromine related business in the current quarter is running good, and we expect around 70 to 80 crore of top line flowing in from in the year 23 from bromide businesses, and we expect a very good margin out of that, looking to the contracts that we have done for the raw material.
And sir, how is our inquiry side on this business?
We have got very handsome inquiries available to us for bromides also in the coming year. That is, inquiries are ongoing for supplies in Q3. For supplies in 23.
Sir, can you share some highlights on our client profile in this business?
In this business, the client profile includes Halliburton, it includes Baker Hughes, Schlumberger. This sort of people are our major customers. We have NIS in Serbia, and we have some good customers with a lengthy relationship in Azerbaijan also.
Okay, sir.
Welcome.
Thank you.
Yes, please.
Shall we proceed to the next question?
Yeah, please.
Thank you. Next question is on the line of Rupesh Katia from Intel Sense Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. My first question is, I think for CBC we have capacity of 1,200 metric tons, and 2,5-DST we have capacity of 600 metric tons. So at peak utilization, what would be revenue potential of these two products?
We expect about 100 crores of revenue from each of the two products.
And can you split it?
100% peak capacity.
And can you split it between 4-CBC and 2,5-DST?
Nearly equal.
Okay. And I mean, currently these are in the process of ramping up, but what is the market size for 4-CBC and 2,5-DST in India?
I don't have much details on this two that can be shared across here.
Okay. And my second question, sir, is this 24 metric ton of TMCS. What is the capex spend and what is the payback period do you expect?
Capex was as part of the IPO proceeds. We had shown an investment of about 41 crores in the plant number 8 and 9 collectively, which has been already done, and it is part of that. We do not have the separated figures to provide you on this.
But what would be payback, sir, for these 3 years, 4 years?
The payback should be less than 1.5 years.
Okay. So it should result in significant margin improvement.
Yeah.
Okay. And my another question, sir, is CMIC is going into ARV APIs. ARV API, as I understand, is a very competitive field. So I mean, what prevents from your clients to doing backward integration? Can you explain what stops them from doing backward integration?
Doing backward integration by the clients is in respect to the volumes in particular. You see, CMIC, we will be inching to about 3,000 tons per year. The largest customer would be somewhere about 80 tons per month, means about 900 tons per year maximum. So working of a plant of this size is damn difficult, and for them it is not that big value addition. Because the consumption norms, so if you see, it is not major for their product. Say, उनके 15,000 रुपए के product के अंदर this is costing around 400 rupees.
Okay.
So उस item में backward integration करके 100 रुपए कमाने का, I think they would not prefer, and which is the ongoing system till now.
Okay. And then my last question, sir, is do we have any big 200 crore kind of product in the pipeline?
Yes, we do have a couple of big products in the pipeline, which would be coming up in plant number 9, as I have already updated the 9, as well as we have the other products to be come up in plant number 10, for which the mechanical working is already been initiated by us.
So Gunine is what kind of market size? Can you talk about it?
Can we discuss that separately, individually, please?
Okay. Sure. Okay.
Thank you, Rupesh.
Thank you, sir.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Next question is from the line of Dharma Venkatesan KB, an individual investor. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah, you are clearly audible, yeah?
Yes, sir. So my first question is regarding the IPO utilization. We have around 55 crores still unutilized. So do we have to take up any more debt for the completion of the P9 and P10 plans, or is this 55 crore will cover it?
Yes, the 55 crore includes the 5 crore as GC, which is a general corporate expenses, which can be utilized any day that they intend. The 50 crore, that is, we had taken in the IPO considering the utilization in the year 23 to be utilized as working capital for the products which will be generated in the plant number 8 and 9. Now plant number 8 has just started. We propose to utilize this money when we come up with the production of plant number 9.
And what is our capital commitment for P10, like plant number 10? How much?
Capital commitment will be about 15 crore, and that would be done from the internal accruals.
Oh, okay, sir, fine. And my next question is regarding the bromide business. If I look through the company's performance in terms of capacity utilization through last 3-4 years, it has been always very low. So did the management miscalculate the demand scenario, or what exactly is the reason that we have so much unutilized capacity here?
Principally, the capacity utilization, there is no misunderstanding or no miscalculation. You see, the minimum capacity installation size was done. However, with the improvement in the technology, we could develop the plant to deliver much more compared to what we had planned. We expected, say for example, 100 kg, and we were able to achieve 300 kg from the plant. That was because of the re-engineering partially we had done. So that is how the 5,000 tons capacity went up to 14,400 tons.
Okay.
That is one. So there was no calculation mistake or there was nothing like that. It was improvement in the engineering which resulted into this.
So as and when the bromide capacity utilization increase, the margin realizations of the business also should trend upwards from here, right?
Definitely.
Okay, sir. And what is the outlook on this part of the business you are having, like maybe next 3-4 years?
I already updated. In the year 23, we expect around 70 crores of business in this.
Okay, sir. And with regard to high purity HMDS, so as I understand, we are started commercial supply to the rubber industry. And what is the update on the semiconductor industry? Are we in trial phases, or what exactly is going on in that side of the industry?
Semiconductor industry, we are not able to penetrate maybe because of the COVID situation across the globe. Because we do not have any domestic users, all we have is in the Western world, and we are facing the heat of this and unable to market it. However, it does not make any difference whether it goes to the semiconductor or to the rubber. The realization, the profitability, the working, everything remains same for us.
Okay, sir. And if it's possible to disclose the margin realization between high purity HMDS and HMDS, what will be the percentage difference? Can you disclose, or is it confidential or something?
High purity margins you can consider about 2.5 times to that of the regular HMDS.
Okay.
Suppose regular HMDS is yielding me about 100 rupees, that will yield me about 250 rupees.
Okay, sir. Thank you very much for the opportunity. And okay.
Thank you. Next question is from Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Good afternoon, sir. My question is, at the end of this year, what will be the return on equity and return on capital employed by our company?
I am not getting your voice clear. It is getting broken. I am not able to understand your query.
Are you getting my voice now?
Yes.
What will be the return on equity and return on capital employed as on 31st March 2022?
I'm sorry, I won't be able to project that and give it to you. I'm sorry.
Will it go up or go down compared to last year?
No, I won't be able to comment on that, please.
Okay, thank you.
Thank you. Anyone who wishes to ask a question may press star and one at this time. Next question is from the line of Satish Kumar, a shareholder. Please go ahead.
Thanks for the opportunity again, sir. Sir, this is regarding this high purity HMDS, which you said we have supplied to some rubber industry. Is it possible to quantify how much we have supplied during last quarter, sir?
During the last quarter, we have not supplied anything, but prior to that, we had supplied it. Last quarter, it is on the way, and as we have got the terms of CIS, it is not included in the results of the last quarter.
Are we supplying during this current quarter, sir?
Yeah, we are supplying during the current quarter.
Okay. Sir, my second question is, like CBC, there was delay in getting the approvals from the customer. We had converted that capacity to manufacture CMIC. Is there any provision for this 2,5-DHT also to convert into any of the existing product?
We are working on that, and still until now it has not been cleared, but we are working on that.
Okay. And lastly, sir, this bromine, since for whatever reason it is getting underutilized, is there any possibility to utilize the idle capacity for any of the product?
We have added certain products which will be which are bromine based to be manufactured in the state plant, and we are awaiting the pollution control permission in respect to that. The moment we get that, the bromine plant utilization for other bromides other than calcium bromide, zinc bromide, we will be starting that, and there would be a new product, value addition, everything will be there. We are just waiting for the clearance from Pollution Control Board, and that is getting again stuck up because of this litigation going on with them.
So can we expect that from Q1 of next financial year?
Yeah, 100%. 100% we should be able to do that.
Okay. Thank you very much, sir.
Welcome. Welcome.
Thank you. Next question is a follow-up from the line of Dharma Venkatesh KB, an individual investor. Please go ahead.
Thank you, sir, for the follow-up. Sir, during this quarter, we had the plant shutdown for the initial days of the quarter. So, is it possible to put any sort of revenue number which we lost because of this?
Revenue number ke badle, why don't we work up on the bottom line? You can see the 9 months performance, the PAT has been growing. You see, instead of 40.9 crores, the PAT has grown to 41.5 crores in 9 months, irrespective of the top line. Now, we had faced about 45 days production loss, and still we have been able to maintain the PAT of the industry. Why don't you look at that?
Sir, sorry. Sir, the
top line, please look at the bottom line of the industry.
Yes, sir.
We have always been working on the bottom line, and we have never worked on the revenue. Rather, we have worked on the PAT.
Yes, sir. Yes, from the previous calls also, I realized the company is more concerned towards the shareholder value and bottom line. I understand that, sir. What I'm trying to understand here is that even though during these difficult times, the company was able to put up such a stellar number. So, if not for the shutdown, what kind of performance are we expecting in the next quarters or the next 9-month period is what I'm trying to understand here.
You can expect about 25% growth on this.
Okay, sir. That was the first part. I think maybe I didn't convey the question properly in that.
Fair.
Second thing is, like in the previous con calls, you have mentioned that there has been some pressure in getting the trade receivables because of the COVID situations. I know you can't disclose the number currently, but I just want to understand whether the pressure has eased and we are going back to the normal levels, pre-COVID levels.
It is not going to the pre-COVID level, but there is a release of pressure. One more thing I would like to bring it to your knowledge, Chemcon is operating with zero bad payments.
Yes, sir. Yes.
We do not have bad debts. If you see if the history of Chemcon, you won't find the bad debts. That is the safety we are taking in respect to the business receivables.
Yes, sir. Yes. And yes, sir. And and this I should have conveyed at the first, but the thing is, I congratulate the company on doing an excellent set of numbers in spite of the COVID pressure as well as the shutdown. So, and thank you for the opportunity for taking my
Welcome. Welcome, dear. Welcome.
Thank you very much. Next question is from the line of Rohit Nagraj from MK Global. Please go ahead.
Yeah, thanks, sir. So the first question is on the strategy perspective. Currently, we are a product-centric company predominantly from an import substitute perspective. So over the next 3 to 5 years, what is the vision that we are working on in terms of our incremental products lined up or the segments that we are serving, whether we continue to look at the opportunities which are on the import substitute, or there are certain other opportunities which are also we are currently working on?
Here, the bromide-based product that I have updated you is export opportunity-based product. Other than that, all the products that we are working upon is we are concentrating on the domestic market as well as an import substitutions only. That is the in principle working process of Chemcon.
Right. So, just a corollary to this, generally at any point in time, how many products are we working in the R&D, or what is the pipeline that we are working from the commercialization perspective?
We are working on more than half a dozen products.
Okay, got it, sir. So the second question is, now we are expecting the new MPP facility will be coming in Q1 and Q4. Given the in the initial part you explained the revocation process. If the revocation process continues on a 3-monthly basis, will it have any impact on the approvals for the newer facilities or the newer products which will come up into the new MPP plants?
There cannot be any reason for the revocation process to continue on 3-month renewal basis. We don't find any reason for that. Say A, B, C, D, E, the GPCB has asked us to implement this by saying within a period of 1 year. If we have done it within a period of 1 month, if their requirements are getting fulfilled, why would they extend unnecessarily multiple visits? We don't find any reason for that revocation getting renewed to 3-month quarterly basis.
Right.
After consulting respective people who are into the field, we have applied this for the permanent revocation.
All right, sir. Got it. I think that's really commendable thing to adhere to all the GPCB requirements and give them feedback within a very short period of time. Hopefully, we'll get the revocation order within the next few weeks. Thanks a lot, sir, and best of luck.
Thank you. Thank you, dear.
Thank you very much. As there are no further questions, I now hand the conference over to the management for closing comments. Over to you.
Thank you. We are elated to inform you that we have emerged as a leader in producing HMDS and CMIC in the world. High quality standards and impurity checks are the critical area for evaluating our edge on overall production process. The complex chemistry is challenging to the market and difficult to handle on a large scale. This is a tremendous growth opportunity for a qualified manufacturer like us, as we serve all the key requirements of the pharma MNCs. With this, I conclude the call. Thank you everyone for joining us today on this earnings call and wish you all a good day ahead. Thank you.
Thank you very much, management. Ladies and gentlemen, on behalf of Global Financial Services, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.